Hello, good morning. This is Jeff Hildebrand for TBL Traders. Today's video will be on trading logs and risk money management. It's a complicated subject. There's a lot to go over. I'll do it as quickly as I can, and I'll speak from personal experience. My personal trading logs are organized by product. By that I mean stocks, options, stock option combos, futures, or future options. I keep my logs based on what type of product I'm trading. As time goes on, they get a little more detailed as well. Sometimes I break them down into strategies as well. But to keep this simple, I'm going to make some suggestions for trading logs that are basically for beginners. One error that new traders make is to try to trade too many products. And what happens with your trading log is that things get mixed up. Trading options and keeping a log for trading options isn't the same thing as swing trading futures or swing trading your favorite stock. And the logs look very different. If you don't keep your products separate, it's hard to stay consistent on creating your logs. So that's one important point. Keep your trading logs to type of product. At least that's my suggestion. I also suggest when you're starting to stick with one type of product. Don't try to trade every different product on the market. Start swing trading. Start trading simple option strategies for a simple product. I would suggest the S&P, maybe the NASDAQ, even one of the European exchanges as a market. Or if you want, you can trade, obviously you can stick with your option trades for your favorite stock. For some information, it took me about 3 to 6 months of slogging it out under each different product category to start to identify which products interested me. As that happened, my trading logs evolved as well. Once you've identified the products which you prefer to trade, as I said, your logs will start to evolve. At first, I copied and pasted charts, and I kept track of charts, and I had to try to remember what a condor was, a butterfly, a bear spread, diagonals, all the different option strategies. At first, I used charts to identify my trades and manage my risk. One of the problems you will discover as you keep your logs is you will have to deal with adjustments, particularly when you're trading options. You'll have to turn butterflies into bear spreads into butterflies, iron condors into butterflies, etc. Those are hard to do. What I recommend is creating an entire other trade. So you go into your initial trade, do your initial trade, keep track of it. You should probably keep track of, you should keep track of the initial price, the target, and the stop price. You will start to develop ways to easily identify all the different option strategies you have by typing, for example, July short 194, long 193 with minus and positive signs. You'll get used to that. Do I put P&L in my log? I don't. Some people do. It's up to you. I don't like to track it in my trading logs. How do you deal with credits? Those are questions you're going to ask. So you're paid. You do an iron condor and you get a credit. How do you deal with adjustments? Like I said, those are complicated things dealing with logs, but you will, if you start simple, stick to a product, define a system to note basically the three things: cost, target, stop, what the trade was, when you entered, and what the expiration is. You'll be in good shape. Now let's look at risk quickly. Risk is the most important part of trading. Your money management and your risk, there's nothing more important. You can keep the best logs, have the best strategies. Risk management is number one. I personally don't risk over 2% of my principal capital. That's a number you can define for yourself, but I would stick to around 2%. It sounds like a little, but you'll see if you're trading options, it's not really very. It's more than you think. So let me give you an example. Let's say you have a $100,000 trading account. What risk percentage does an iron condor, the iron condor that I talked about, for example, 195, 196, 194, 193 on the SPI, represent 10? What does that 10-foot iron condor represent? It cost me my max loss for 10 block iron condor would be $140. The answer is obviously 0.14% of my $100,000 risk capital. Sounds reasonable. What about buying a SPY put outright? Let's say it's a July 196. Today it's at 303. My max loss would be about $3,000 or a $100,000 trading account. That would be about 3%. Okay, you see the difference. Let's say I create a spread out of that SPY put that I bought, and I sell a July 192 for about $1.50 or $1,500. Right away, my risk percentage is cut in half. So is my max profit potential, but now I'm under my 2% risk threshold by creating a spread. That's why you will come to like spreads for your risk and money management needs. Another suggestion is never be naked. Unless you really know what you're doing, don't sell puts or calls outright unless you have a hedge or cover on a spread. Just as a beginner or somebody starting, don't be naked ever. Create the spread. So those are the points I have for this video. Thanks a lot. I hope you enjoyed it. And obviously, if you need more detail, let me know. Thanks.